Srishti, stay with us because after Aisha, we also have another auto counter that's Maruti Suzuki that's posted an inline set of Q1 numbers where the higher promotion costs and the new plant-related expenses have impacted the margins. Take us through the roundup of or the fine print of what the earnings really look like.
Promotional cost did impact the earnings for Maruti Suzuki as well as the margin profile specifically and the higher raw material cost as well. But barring all of that, the margins were actually in line to what the poll was suggesting. 10.3% is what the company has reported in terms of the margins, but operationally there's been a slight uptick versus our estimates as well. Now, when it comes to the brokerages, then there too we have seen Nuvama going ahead and raising their target price from 13,400 rupees to 14,300 rupees, where they say that the outlook remained positive. Along with that, they retain buy based on that 27 times is what they are valuing the company in terms of their EPS estimates. Along with that, we also have Avendus, where they have also maintain an ad rating on this counter and raise the target price to 13,350 rupees. What Avendus is saying that the UVs are projected to account to 41% of their domestic volumes in FY27 is the favorable operating leverage that is expected as the newly commissioned facilities were ramped up, and they expect the export growth outlook to continue for Suzuki as the company maintains the export outlook and plans to go big when it comes to their overseas expansion.
All right, Srishti, well, a very busy day coming for you. Aisha and Maruti both, let's see how the market reacts to their results. But it's also that time of the month again when auto dispatch data will start trickling in. And once again, it is expected to be a mixed bag as two-wheeler sales remain healthy on the back of exports. But PVs could continue to be muted amid lower inquiries and delays in conversions. What are you expecting? What is the poll looking like?
Well, it's expected to be a mixed bag for the auto sector for the month of July. The key outperformers could be the tractor and the two-wheeler segment to be backed by a positive rural sentiment, while for commercial vehicle segment, we are expecting that because on the low base, we can see the companies posting a positive number on the YoY basis. While for passenger vehicle companies, the subdued environment continues and the demand outlook is not that great as well. But when it comes to the numbers, let's talk about that. When it comes to Tata Motors, they're once again we are expecting an 11% decline on their overall volumes, while an 8% uptick is what we are expecting on a month-on-month basis. While for M&M Automotive Division, a 16% jump is what we are expecting on a YoY sales when it comes to their automotive sales. Along with that, when it comes to CV numbers, then there too, the key outperformer could be Aisha Motors VECV, wherein an 8% jump on a YoY basis is what we are expecting, while for Ashok Leyland as well as Tata Motors CV, just a 3 to 4% growth is what we are penciling in. Now let's talk about the two-wheeler pack, because there we can expect a double-digit growth for across the companies barring Bajaj Auto. There the expectation is a bit muted, but the double-digit growth could actually be backed by the good export data when it comes to select counters, be it Aisha Motors or TVS Motors as well. And lastly, from the tractor division, let's have a look at the YoY numbers, because month-on-month the seasonality might kick in, and on a YoY basis, M&M Tractors is expected to do good with units over 30,000 of units is what we are expecting, while from Escort 7,200 is what our poll is suggesting. Back to you.
All right. Thank you so much, Srishti, for joining us with that.